Have you ever wondered how to invest your first 1,000 euros? It can seem daunting, but don't worry, we've got you covered. Investing is not a scheme to get rich quickly, but rather a way to grow your wealth over time. Think of it as planting a seed today, nurturing it, and then reaping the fruits years down the line. It's a game of patience and strategy, not luck. And one key strategy is diversification. This is the practice of spreading your investments across various asset classes to reduce risk. Imagine not putting all your eggs in one basket. That way, if one investment doesn't perform as expected, you have others that might. It's a safety net for your hard-earned money. So if you're ready to play this long-term game and learn how to invest your first 1,000 euros, let's dive in. One of the easiest ways to start investing is through exchange-traded funds, or ETFs. Now you might be wondering, what exactly is an ETF? Simply put, an ETF is a type of security that tracks a specific index, sector, commodity, or asset. It's like buying a share of a whole market rather than just one company. The beauty of ETFs lies in their diversification. Instead of putting all your eggs in one basket, you're spreading your investment over a wide range of stocks or bonds. This reduces the risk associated with your investment. Plus, ETFs come with lower costs compared to other investment options, making them a cost-effective choice. They're traded just like individual stocks, so you can buy and sell them throughout the day at fluctuating prices. In essence, ETFs provide you with a way to easily invest in a broad market segment. ETFs can be a great starting point for beginner investors due to their simplicity and accessibility. If you're a bit more adventurous, you might consider investing in individual stocks. Now, this option can offer higher returns, but it does come with a higher risk. You see, when you invest in a single company's stock, you're basically betting on the success of that company. If they do well, your investment could flourish. However, if they struggle or fail, your investment could take a hit. This is where research becomes your best friend. Understanding the company you're investing in, its business model, its competitive landscape, and its financial health are crucial before you dive in. Remember, investing isn't about making quick bucks. It's about making informed decisions. You might be attracted to the high-flying tech stocks or the steady blue-chip companies. Whichever you choose, it's important to diversify your portfolio. This means not putting all your eggs in one basket. Spread your investment across different sectors and companies. Investing in individual stocks can be exciting, but remember, it's essential to diversify and not put all your eggs in one basket. For a more conservative approach, you might consider investing in government or corporate bonds. Now, you might be asking, what exactly are bonds? Well, simply put, bonds are loans that you give to governments or corporations. In return, these entities promise to pay back the loan with a fixed interest over a set period of time. This interest payment, also known as a coupon, is your steady source of income from the bond. But just like with any investment, there are risks. The main risk with bonds is the issuer defaulting on their payment. However, this risk is generally lower with government bonds. Now, on to the benefits. Bonds are considered less volatile than stocks, and thus, they can help to balance the risk in your investment portfolio. They also provide a consistent income stream, which is particularly attractive to those seeking regular payouts. Bonds can be a safer, albeit lower-yielding option for your investment portfolio. Another option for diversification is investing in mutual funds. Now, you might be wondering, what are mutual funds? Well, they are investment vehicles managed by professionals that pool together money from multiple investors to create a portfolio of stocks, bonds, or other assets. But why choose mutual funds? The answer lies in two words: professional management. Mutual fund managers are seasoned pros who dedicate their time to researching the market, selecting the right assets, and adjusting the portfolio based on market trends. They do the heavy lifting so you don't have to. Moreover, mutual funds offer instant diversification. Rather than buying individual stocks or bonds, you buy a slice of a large, diversified portfolio. This reduces risk and can potentially yield more stable returns. So whether you're a seasoned investor or just getting your feet wet, consider the potential benefits of mutual funds. With mutual funds, you get the benefit of professional management and instant diversification. If you're technologically inclined and willing to take on more risk, cryptocurrencies could be an option. Now let's delve into the world of digital currencies. Cryptocurrencies are decentralized digital assets that use cryptography for security. They're not tied to any government or central bank, meaning they're free from traditional economic factors that can affect traditional currencies. The most well-known cryptocurrency is, of course, Bitcoin, but there are thousands of others, each with its own potential for growth. The potential for high returns in this market is substantial. In the last decade, some people have made fortunes from their cryptocurrency investments. However, it's crucial to remember that with great reward comes great risk. The cryptocurrency market is notoriously volatile and unpredictable. Prices can skyrocket one day and plummet the next. It's not for the faint-hearted. Cryptocurrencies are a high-risk, high-reward investment. Always do your research and invest only what you can afford to lose. So there you have it. 5 options for investing your first 1,000 euros. We've looked at index funds, a superb way to gain exposure to a wide array of stocks or bonds at a lower cost. We've discussed individual stocks, allowing you to invest in companies of your interest, but remember, diversification is crucial to cut down risk. We've touched on bonds, less risky than stocks with a generally lower yield. We've explored mutual funds, offering instant diversification and professional management of your investment. Finally, we've delved into cryptocurrencies, a volatile market for those interested in technology and understanding the associated risks. And let's not forget about retirement savings, an excellent long-term strategy for your financial future. Before making any decisions, remember to do thorough research, understand the risks involved, and consider seeking advice from a financial advisor. Remember, the key to successful investing is patience and diversification. Happy investing. Before we wrap up, we have a small request. If you found this video helpful and want to dive deeper into the world of investing, don't forget to hit the subscribe button and bell notification. We regularly post videos about investing tips and tricks, breaking down complex financial concepts into easy-to-understand language. And we'd love to have you as part of our growing community of future financial gurus. So join us on this journey, and together let's conquer the financial world. Remember, every great investor started somewhere, and you've already taken the first step by watching this video. Thanks for being with us today, and as always, happy investing.